Hey traders, it's Ray from Trade90X, and it is the 26th. It's the weekend, holiday weekend here in the U.S., and hope everyone's had a great week and is enjoying the holiday weekend. I know I am. I'm just taking a quick break this morning early in the morning to put out the Trade90X weekend review. And again, I always appreciate the participation. So let's jump in so we can get back and enjoy the weekend. So as you guys know, for me, everything's about process. I am a stickler for process. Again, keep things simple. Okay. If you're going to do things that are complex, it's just going to create chaos. So the bottom line is this. In order to succeed, you've got to have a strategy that's simple, replicable, and it must have a statistical edge. If you're trading, even in any business, if you don't know what that edge is, then why are you in business? Okay, why would you ever risk capital? Now, if there's anything you don't understand, just hit us up at hello@trade90x.com. I am here to help. And again, if you take advantage of it now at our Trade90X Instagram page profile, you can book a 15-minute free call and ask us anything about trading. So what are you waiting for? Now, again, for us here at Trade90X, we have the Earn the Right to Trade Live process that we created that includes education, back testing and support and accountability and technology. Now that back testing, support and accountability for me is what really sets us apart and what helped me, really get to that next level. Now, if you really want to learn also more, let me just pull it up. Go to our, let me just pull up the YouTube channel right here. And if you go to the Trade90X, just put in Trade90X. And there we go. And there we go. All right, so if you go here, I've put up a bunch of other master classes right here. So definitely go through here, and this will really, I'm going to start putting out more. So just make sure when you do it, make sure these are all new, give it a thumbs up. And again, by, creating the likes and thumbs up and sharing it, this will help us with the algorithm and actually help us do more. And also, if you hit us up at hello@trade90x.com, if you give us some topic matters, we will definitely look to cover those. All right, let's get back to this. So bottom line is, first thing I'm also going to be looking at is I'm going to be looking at news and earnings. Now, one of the things that I just want to get back to, and I do mention it every day, make sure you snapshot this every day. Okay, this is our trade plan. If your trade plan's more than this page, that's probably too complex. Now, one of the things that's very important I go over every morning is routines. Routines is a big part of our strategy. The routines actually really keep us focused. Now, for us, we're here, we trade in the New York session. Now, we typically between 7 and 8 a.m. Eastern time is when we build our plan. 8 a.m. to 12 o'clock is where we execute the plan. We do not trade into news and earnings. And then when we're done trading, we will do our journal and review, rinse and repeat. Now, I also have a pre-market that's usually between 6 and 7 a.m. And this is where I'm getting my mindset right. I like to do things like cold baths or showers if you don't have the cold bath, meditation, quick exercise, drink a lot of water. And it's like for me going to battle. It's like I have a window each day. I want to be focused. And I always tell people, if you're not focused and your mind's not right, don't trade that day. All right. Now, also, please also discuss with your financial advisor about risking capital, and also make sure you have 6 to 12 months of emergency funds before risking any capital trading. Are we clear? Cool. All right, let's go get into it and see what the week brought us and what's going to happen this week. So again, I always want to check the news and see what's happening. Again, Monday is going to be a holiday, so it's going to be a shortened week, but we're going to have consumer confidence. Wednesday, not much. Then we'll have GDP, unemployment Thursday, and then core PC. So this will be important, definitely Thursday and Friday, and we'll see what happens on the confidence level. These things are definitely important. So again, my hope is with important news that price comes out, we let it settle, and then it moves quickly to one of our ace setups within a bullish, bearish, or range context. Are we clear? Excellent. Fear and greed. This tells us what the sentiment of the market is, and we're sitting here in neutral. And then for crypto, there's also one, and crypto still has a bullish bias. Barchart.com, go to stocks, market momentum. Again, and what I'm looking at here, again, remember, our goal is every day, who has control? Okay, all I care about in the big time frame, I want to know in the big time frame who has control, in the short term who has, that's it. That's all I want to do, and this is what this data is for. And again, then ultimately the charts. Now, if you look at the 50-day moving average, we've been kind of going back and forth. Same thing with the shorter term. Now, the long term is still bullish, but that 20 and 50-day are definitely been going back and forth. So it tells us there's a lot of indecision right now in the short term, but we'll check the chart. FinViz, again, love this. You can see right here, the Friday cash session, everything closed bullish, except the Dow was a little bit weak, which was concerning. And we look at the bull bear ratio, it was more of a bullish bias to the close on Friday. All right, so I love this tool. Now we also use that group tab because I want to see sectors. And again, it's not rocket science. I give you the $1 million stuff every single day, every weekend review. It's not rocket science. You just need, listen, this is, when you're part of the Trade90X or in the Right to Trade Live community, what you're going to learn is, number one, you're going to understand, you're going to learn the rules of engagement. Okay, if you don't know the rules of engagement, I don't care if it's real estate, private equity, whether it's trading, how are you going to succeed? Okay. Number two, you must have a plan with a statistical edge. You must also master your risk and money management. Now, for us, for active trading, I talk about this every morning. I never hold back. We don't risk more than 0.5 to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital in any one session. We don't risk our risk reward. We focus on a minimum of 2 to 1 to target 1, and then we have defined profit and loss targets within that 3 to 5%. And the reason why is capital preservation. And again, if you do not know your numbers in business, you're going to fail. Okay, you cannot have a business without knowing your numbers. There's no way you can scale it. Okay, so if you have a plan that, or Trade90X, or if it was any other one, doesn't talk about the rules of engagement, talk about numbers, then you know what? There's no way you're going to succeed. Now, let's get back to actually breaking down the data. So FinViz here, 1 year, half year, 3 months, this is telling us the main trend is bullish. And then the monthly, weekly, daily, we use for our swing, day, and scalps. And we can see there's bullishness in the monthly, but definitely indecision here. So we definitely have some indecision going along. So we'll check in the charts. The charts will be the final ultimate decision. But again, I'm always trying to understand who has control, because the more that I can trade with the obvious power of the market, the higher the probability my trades are, no matter what type of trading. All right, tradingster.com. Remember, I talk about this every day. Every Friday, a new commitment to trader report comes out. It comes out once a week. And what I'm looking at here is the smart money. Smart money is the 85% of the market order flow in any one of these symbols. And again, I'm going to look at the indices. I'm going to look at the S&P. And when we look at this right here, again, I don't care what someone tells you on CBC. I don't really care what someone tells you on YouTube. I give you the facts, not fiction. This is telling you 85% of the banks, the institutions who control that 85%, not retail traders. It's 85% bullish bias versus 14%. So that's big right there. So that's telling us, until we see a personality change, that the dips are going to be favored to the bullish side. Okay. Next. Again, stockcharts.com, which I go through this every day. And why do I go through all this same stuff? Because it works. Again, our job is, I'll say it again, number one, do I have a plan that's been back tested to have an edge? Yes. Do I understand the rules of engagement? Yes. Do I understand numbers? Yes. Have I mastered what bullish, bearish, and range context looks like? Yes or no? Have I mastered what the bullish, bearish, and range setups are? And do I understand how to journal those trades once I'm completed? Now, bullishness is lower left to upper right. Bearishness is upper left to lower right. Ranges equal highs equal lows. Now, I love stockcharts.com because I love these predefined groups I can look at and with a clickable button, I can show you the main trend versus the short term. And these are the symbols, not only do we feel are a great representation of the market overall context, but these are symbols that we trade: Dow, S&P, NASDAQ, NYA, Russell. Again, these make up of the indices. The VIX, 10-year, and the dollar are kind of my odds enhancers. And then, of course, I have Apple, which is probably the most highly, held stock. And then I have gold and oil. But these indices, along with the VIX, for me, are my key. So whether or not we're bullish, bearish, range, or I can't figure it out. And again, bullishness is lower left, upper right, bearishness, upper left, or right, ranges. Now, in a bullish, bearish market, I don't care if you're trading a 1 minute, 5 minute, 60-minute, weekly, monthly, you're looking for those clear momentum into pullback and pause. Those pullback and pauses that are obvious within a bullish bear range, that's where momentum, that's where you're going to look for your setups. In a range, same thing. I don't care what asset class, I don't care what time frame. You're looking for ranges, equal highs, equal lows. In the middle, I do not want to trade. That's low probability. In a range, no matter what time frame, no matter what the symbol, if it's part of your trade plan, I'm looking for bullish rejection at the bottom third, top third rejection, bearish to go short. And again, when you're part of the Earn the Right to Trade Live process, you will learn to master these. Now, long term, we are bullish. We're moving lower left, upper right. The VIX is moving down. All right, so now let's go look at the short term. Again, are we bullish, bearish, range? I can't figure it out. Well, Dow came in, was lower left, upper right, came back to this recent high, is now showing us some bearish momentum. S&P, NASDAQ, we are definitely in kind of indecision mode. Russell's definitely showing some weakness with the NYA. And we have the VIX, though, is kind of sitting, kind of basing there. So we don't have enough information in the short term. When we look at Apple, it's moving lower left to upper right. You look at oil, upper left to lower right. And when we have gold right now, it looks like we're kind of in a possible top. So we'll have to take a look at that a little bit more, a little deeper. So right now, the long term is absolutely bullish. The indices are kind of mixed right now. So let's go look at a little bit more information and let's see what that shows us. So one of the things also, when I showed you the how many stocks are above there, 20, 50, and 200, I created a chart here, and I've got the S&P, NASDAQ, Dow, and I like to just look at this one the weekend. I have the dollar and the VIX, and you can see the VIX is moving down, but we're at the low end of the curve. And then here are the extremes. Now let me break this down, what this looks like. Now remember, these are just odds enhancers. If there are no setups in the chart, it doesn't matter. But again, I want to know what the sentiment is. So this goes back 20 years. So over the last 20 years, if you look at this, when we've been somewhere in this 4 to 20 range, there's been a high probability of, if this was bearish and we get a reversal, high probability in the short term we could reverse to bullish. Same thing at the top. When we're up in that 70s, 90s range, we get a reversal, very high probability of potentially. Now, how I use it is, say I'm in a long trade here and we start moving in, I start seeing obvious reversals. I'm going to start taking profit, tighten up my stop, and maybe leave a runner. Same thing with down here. If I'm in a short position, I start seeing this, I'm going to start tightening up my stop, take profit, and I'm also going to maybe leave a runner. All right. But then also what makes it more powerful is when all three are at these extreme areas together in the bottom of, okay. And then once we get to these extreme areas, do we have a setup? And I want to look at it, and do we have an actual setup? Okay. Do we actually have a setup in the S&P, NASDAQ, or Dow? And we can see right now in the short term, a Dow is definitely broken down below these quick momentum bands. So the Dow is definitely a little bit more weaker than the other indices. All right. All right. Now, one other thing also that I like to look at the end of the week or month is these are just correlations. This is the VTI. This is total stock market. And we can see that it's moving lower left. Remember, I don't care what time frame, you have to understand bullishness, bearishness, range. Bullishness is lower left to upper right, and bearishness is upper left to lower right, and ranges equal highs, equal lows. And I do have these kind of momentum bands here just for visualization, so you can see the total stock market is bullish. This one is the S&P against the 2-year note is bullish. This one right here is S&P against utilities. And what's interesting is that utilities, because the SPY, remember, whatever the lead symbol is, that's the SPY. But because it's broken down, that means that there's been a little bit stronger buying in utilities, which is more defensive. So that's something to watch out. This one is very interesting. This is a S&P against the money supply. As long as they continue to print money, it's bullish. Now, if you open this up and we go look at this, you can see from 2000 leading up here down into the financial crisis, there wasn't as much printing. And then, of course, right after the financial crisis, we started, printing, and we can see now what's interesting is this consolidation area. So is this an area that keep printing money, get up here, and then have the similar result? Well, we'll find out. But as long as we continue to print, this has been, as long as the Fed induced, this is what we got. So these are important to just keep an eye on. Now, this is this is growth versus value. Right now, growth is still winning out. So again, you want to understand these because again, right now, since the beginning of the year, growth has definitely been in favor. Now, this is the consumer versus staples. And then this one is also kind of telling to me it's a little concerning because remember, we're consumer based and staples is more defensive. So when you look at that in XLU, I don't know, is that something to look for? So I'm gonna have to watch out for that one. We got the S&P against the VIX, still bullish, and S&P against the dollar. So right now, bullishness, but I just want to keep an eye on these two right here, because these are more defensive. So we could have some divergence happening, but we'll see. Right now, signs are telling us that we're bullish, so we'll just stay the course. Again, these are just all odds enhancers, and when you report the Earn the Right to Trade Live, again, these are things especially, and these are really good more if you're swing or position trading. Again, if you're going to be a longer term, in your retirement portfolios, again, these are the type of things that you just want to understand. Okay, now let's get back to it. And again, as I mentioned, if you want to learn more about our process, just go to our Trade90X YouTube channel, and this will talk about the stuff that I go through in the pre-market and the weekend reviews. All right, so now that we have an understanding, long trend is up. Short term is definitely showing us a little bit indecision. Now let's go to the chart. So the first thing I always do is I show you the top-down approach, and then I'm going to show you excuse me, sorry, Earn the Right to Trade Live one chart strategy, because it came from you guys asking me for a faster process and the ability to look at, say, 1 or 5, 10, 15 symbols quickly to determine whether we have a bullish, bearish, range, or no edge bias. All right, so let me just do the top down first. So anything, here is your monthly, and I like putting up a 6 months. Hold on a second, let me just put this and a monthly. There we go. All right, so anything a monthly and above is going to be your main trend. Now remember, whatever the chart you're looking at, you must understand, again, are we bullish, bearish, range? Okay, now one of the things I like to do is I like to use a line chart into candles or a Heikin-Ashi. And again, Heikin-Ashi charts, as I've explained, are excellent. They filter out the noise, and they're trend candles. The only thing with Heikin-Ashi, they do lag. So I always recommend, looking at the candles first, then Heikin-Ashi. But first, I like to use a line chart. And the reason I like to use a line chart and this momentum band right here is because it allows me to quickly determine whether we're bullish, bearish, or range. And remember, bullish trades, I'm looking for momentum. Well, I don't care. You could use this on a 1 minute or monthly. I'm looking for momentum into pullback or pauses at or above. On a bearish, I'm looking for that momentum band sloping down, and I'm looking for momentum at or below. So on the monthly, we're at and above. Then I go to my either candles or my Heikin-Ashi, and as I mentioned right here, here are the trades right here, engulfing candles. So when you part of the Earn the Right to Trade Live, you'll learn that we use for bullish engulfing candles and pin bars with the wick on bottom, or I like the dojis into those two. On the bearish side, I'm going to look for momentum into pullback or pause at or below, and I'm going to look for the red engulfing. I'm going to look for the shooting star on top or dojis into that. Now, here we have an engulfing candle. Remember this, we still have a few more days. So if this closes as a bullish engulfing, this could be another setup on the monthly chart. All right, so now also if I put on Heikin-Ashi, you can see the trends right here. Lower left, upper right. See, doji into right here. Now with engulf, with Heikin-Ashi, when it's bullish, the wicks are on top. Heikin-Ashi, when it's bearish, the wicks are on bottom. There should be no wicks on top. And again, this is telling us bullish momentum, but now you have double doji here. So if we close above here, then we could have another leg up. All right, so we'll keep an eye on that. Same thing with the weekly. It doesn't matter what chart you're looking at. And again, you got, again, this momentum here, and we can see at or above. And again, I look for those momentum pullback at or above. I put on the candles or the Heikin-Ashi, and I can see momentum into pullback or pause right here. This was actually a setup there, a little pin bar right there, or doji, and you have an engulfing into a pin bar, and now here you have the pin bar candle. So these were the two really nice setups right there. Let's see if we put on Heikin-Ashi, what happens. Same thing right there. Again, I want to be above, I want to see momentum, pullback or pause. Now this one right here also, because you had momentum, pullback and pause, so the Heikin-Ashi one gave us a nice setup right there. All right, so right there were your setups right there using Heikin-Ashi, and we're moving lower left, upper right. And what's nice about the Heikin-Ashi candles is it kind of filters it out, meaning that you can see those momentum into pullback and pauses, and you can see the change, the pullback, and then, so I like that. Now, here's your daily one. Same thing. We're moving lower left, upper right. We had a pullback, double bottom. Now we're moving back up. Let's go look at the line chart. You see, again, I want to be above these bands. Put on the candles. And right here, you had doji right here. Here we go. And this is a bit of setup right here. Again, I'm always looking for those clear momentum into pullback and pause. Do we have a candle? And right now, you can see we just basically have a sideways range. So I'll just put these here. And there's nothing to do until we have, remember, with ranges, bottom, middle, top. This is a tight range. And we look at ranges until it can break back to bullish bearish momentum, no matter what time frame. But we are bullish into consolidation. We just don't know yet if we're going to break up or down. So right now we have indecision on the daily chart. Again, you trade the chart that you're trading, and you don't do anything unless there's a setup. That's the bottom line. You learn to sit. Again, so we know that the top down is bullish, and right now in the short term, we're having some indecision. Now, the 60-minute is a big part of our Trade90X Earn the Right to Trade Live one chart strategy. And again, what I'm looking for in the one chart strategy is I am looking for, number one, in any good strategy, I want to know my numbers. I gave those to you. I give them to you every day. I don't hold back during the week. On the weekend reviews, I never hold back. You have the numbers. Number two, I like to have a set of tools that are predictive, not lagging, that are here before the fact, not after. Well, you see these in the chart. Number three, I need very precise bullish momentum, bearish momentum range setups. I also need to understand when there's no edge choppy price action. And I'm going to show you, I do this every day. I've been doing it over a year and a half. I'm going to do it. And on the weekend, it's a little bit longer because I do more symbols. And the last step is having the actual steps. Well, we have a 3-step process that's the same. And I'm now going to break it down to you. So let's get into it. So you know the numbers. I already given those earlier in the video. Number 2, previous day's high low in gray, the monthly high low in orange, the weekly high low in purple, and then the previous day's range, high low in black right here, the midpoint in red, the previous day's close right here, the dotted line, and the open quickly tell you the short-term bias. Now, anything above or below the previous day's range, if we have obvious bullish price action momentum above, we have short-term bullish momentum. If we're below the previous day's range low with obvious lower highs, lower lows, that's bearish momentum in the short term. Anything inside the range tells us it's a neutral bias day. So when we're looking above or below, if we get that obvious price action, then we're going to be looking for bullish or bearish continuation. If we're in the range, I'm going to show you in a minute what we're going to be looking for, or do we have no edge? So the tools, what they do for you, they quickly help determine whether we're bullish momentum, bearish momentum, range, or no edge. Well, that'll put you ahead of 99% of the other traders because you know exactly what the context is, what the setup is, and then now you're also going to master what the A setups are. Okay, so now let's go through this. So right now, let me show you the setups. I'm going to go down to a little bit, 15 minutes. I see the more structure. So remember, anytime you have a previous day's range, where if you have a monthly, yearly, weekly, monthly, yearly on top of the previous day's high low, well, that makes it even stronger. And if they're close by, I just turn them into a zone. And also, remember, they can be used as entry, stop, and target. So right now you have a weekly, monthly, yearly right on top of the previous day's high. This was on Friday. Okay, we have a weekly on top of the previous day. So we know these are strong. All right, so the first thing we do is we identify where was price on Friday. Was it above for bullish momentum the previous day? No. Was it below the previous day? No. It was inside the range. So you knew already on Friday, and we talked about this Friday on our pre-market, you knew that it was a range day. And in a range, we look for range setups until price can prove back to bullish or bearish momentum. All right, so now let's look at the setups. So the setups look like this. If I'm making clear higher highs, higher lows above the range, we have short-term bullish momentum. And this is going to be whether, again, I'm swing trading, scalping, or day trade. The only difference is swing trades is potentially days or weeks, and our, scalping is seconds to minutes, day trading is minutes to hours, but those two are both flat at the end of the day. But if you don't know that we have bullish momentum, bearish momentum, or range, you're going to make the wrong trade. Okay, so do you see the value in this, how quickly it works? So here, bearish momentum looks like this. Lower highs, lower lows, those momentum into pullback and pauses is where we look for the continuation. So that's why I call it either bullish continuation, bearish continuation, anything in the ranges, I'm usually looking for momentum rejection. So what I mean is the following. So what I'm looking for in a range is I'm looking for that bottom third rejection, which we got Friday, or momentum into rejection at the top third back to the middle or bottom. And we're in at the bottom, I'm looking at the middle and top. We're also looking for what's called the fake out breakout. So if we would have done this, see this strong momentum, and the sellers look like they have it, but then we did this, we call this the fake out breakout. And then at the top of the previous day's range, I'm looking for this fake out breakout down to the middle or bottom. So these are the setups that we look for regardless of what the symbol is. All right, so now you understand bullish momentum, bearish momentum. You understand momentum into top third rejection to short, momentum at the bottom third rejection to go long, fake out breakout to fade short, fake out breakouts. Now let's look at what no edge price action. Again, now when you go through the Earn the Right to Trade Live process, you're going to go through hundreds and hundreds of charts and master the tools and the setups. And these tools, the setups, are going to quickly help you determine what a setup is for for bullish momentum, bearish momentum, top third, bottom third rejection of the range, and fake out breakouts. And then most importantly, when there's sideways choppy price action, to do nothing. I mean, this, again, when you identify this, the last thing you want to be doing is trading crap. Okay, we look for momentum setups. Okay, and when you go through enough charts, you'll be able to identify this with mastery. All right, so now, so this was Friday right here. The only setup that was on Friday was right here. Now, unfortunately, we're doing our pre-market between 7 and 8. We like to trade, and again, we don't trade into news, but again, we like to trade between 8 and 12. Now, you may find also the afternoon session, and that's something when you're part of the Earn the Right to Trade Live, we'll evaluate for you. But here, unfortunately, this was really the best setup right here, looking at this chart. And sometimes that's trading. Sometimes we just don't get setups. Sometimes there's 5 setups. Sometimes there's 1. Sometimes there's none. But again, we like to trade 4 to 8 symbols here, Trade90X. So typically, I always find one symbol that has at least a setup. All right, so now let me go and show you the actual steps. Okay, so you know the numbers, you know the tools, you know the actual setups, bullish momentum, bearish momentum, range setups, top third, bottom third, fake out breakouts, and now you know what no edge is. The steps are the same every day. When we come in, I've been doing this for over a year and a half, I go to the weekly chart. Why do I go to the weekly chart? Number one, any symbol that I'm looking at to trade, I want to see what the bigger picture is. We are moving lower left to upper right. Okay, here is upper left to lower right. Here is a range. We are moving lower left to upper right. That means we're bullish. In step number 1, I also want to look at, with the red horizontal line, I call these decision points, and they come from the monthly and weekly. And what I'm looking at is where are the red and green candles, and where do we have the most recent rejection? Okay, here, and right here. I call these decision points, and again, they only come from the monthly and weekly. Now, number 2, I'll use anywhere from a 15-minute to an hourly. And what I'm determining here, now, by the way, this yellow line is where the week starts. And what I'm looking for, I squeeze the chart up, and I want to see what's going on, bigger picture. But remember, this is the intermediary trend, and you can see we had that bigger upper trend. We had a bearish pullback. Now we've been bullish, and now we're right back where we were, and we're kind of now in indecision mode. We're kind of in sideways weekly. This week was kind of a weekly sideways, but leading up to it, we're bullish. So we can see we're bullish into a pause right now. We have our decision points. There we go. Now, let me put this in blue. This will be the new high-low coming into the session. All right, so now let me go to step 3. I like to use a 1 to 10 minute chart. Okay, this will be the new open right here. And so we now have a new previous day's high. We have a new previous day's low. And what I'm going to be looking for, and again, what I love about this process is, number 1, you know the rules of engagement, okay? You have a back-tested plan. You know your numbers. You have a set of tools that quickly determine whether we're bullish, bearish, range, and then in the range, are we at the top third, bottom third, fake out breakouts, or do we have no edge, choppy price action? And then we have actual steps. So right now, we're sitting here coming in. So when price does open, we are in a sideways price action with a previous day's high, low right here. So again, we're in a range right now, setting up. And what I love about this process is, again, I have no interest in even looking at swing trades unless we're above or below with obvious bullish or bearish momentum with space. If we're in a range, then we know that I'm looking to if we get that momentum rejection that's obvious, top third, bottom third fake out, rejections or fake out breakouts. And if there's no edge, I do nothing. So what I'm going to be looking for is the following coming into the next live session. Number one, do I get a strong rejection to go down to the middle or bottom? Do I get a strong momentum into rejection at the bottom third to go long to the middle or top? Do I get a strong momentum rejection fake out breakout that looks something like this to fade short? Do I get a strong momentum into fake out breakout at the bottom to go long? Okay. Or do we get a change of personality, higher high, higher low, and then I've got a nice target back up here? Or do I get a change of personality? We break below and do this. So this allows me to quickly look at any symbol. So by the time I'm done with this video, if you're not getting it, then hit us up at hello@trade90x.com. All right, let's go look at NASDAQ. So again, on the weekend, I do more symbols. Let's go. Let's run through these quickly. Number one, see, once you understand my process, looking at the data, looking at this, it'll only take you, honestly, 10, 15 minutes every single day. And I do it in the morning. I do it at night. All right. And again, my goal is to understand the rules of engagement, understand my numbers, understand who has control, bulls, bears, or range, master my setups within a bull bearish range, and understand when to sit on hands when there's no edge. Okay, right now, NASDAQ, we're moving lower left to upper right. Where are the areas where price has paused most recently? Here and here. Okay, I'll put this one here as well. All right, so now we have our monthly, weekly decision points. I go to my hourly chart. All right. So now what has price been doing? Well, we know it's the same as the other ones. We were bearish short term in the pullback, and now we have a bull bias. And like the S&P, kind of more of a range bound. So let's just put this in there. There we go. All right. So on Friday, we had a range day, just like the S&P. All right, so we were not above the previous day's range, we were not below, and also we have a weekly, monthly, yearly on top of the previous day's range, and we had a weekly on the previous day's low. All right, let's go to that 3-minute, see the structure, and what happened here. Let's just look at the setups first. Well, we had momentum. The overnight traders definitely had setups here. And then a retest in the bottom third of the open. And again, this happened in the overnight. We were here coming in and we had this kind of no edge price action. And then right here, we got a rejection out of here. So this one definitely more than the S&P, but again, this one had a good potential setup right here, more than the S&P. And then it broke above the middle, and then it just went into sideways price action, which happens on a Friday. So NASDAQ definitely gave you some small momentum, more so than the S&P. All right, let's go to the Dow. And again, I'm going to trade the symbol that out of the symbols we're looking at. I'm showing to you now which one of them has the most obvious setup. All right, so in the bigger picture, we're moving lower left to upper right. Now the Dow, again, where are the decision points where the red candles, where you see price paused and left quickly, here and here. So you can see the Dow right now in the bigger picture is in a range from 37 to about 40,000. All right, step number 2. Okay, we have those decision points. We have our tools. We can see same thing as the other, the other indices. We had that short-term pullback, then we had the reversal, and then also now the Dow, more so than the S&P and NASDAQ, has definitely had a bearish bias this week, where the other two were more sideways, upper left to lower right. It's not rocket science. Okay, now using the tools. What did we have? Were we above the previous day's range? No. Were we below it? No. We were inside it? Yes. Let's go down to the smaller time frame. And we can see that the Dow was just crap. Okay. You don't want to trade that shit. I mean, that's just right there. Just choppy, no edge price action. Again, this is what we want. You see this right here? We want movement. I want movement. Okay, I want movement. Movement. If you don't have movement, I'm not interested. This was just crap. You had no business trading. And if you were trading the Dow, then you need to get involved with us ASAP and ask questions. Okay. But again, if you just watch my pre-market, my weekend videos, or go to YouTube here, again, I'm giving you free stuff, showing you how to do this stuff every single day. All right, let's go look at the Russell. And again, the beauty of this process is it allows you to have a very precise steps, tools, money management, setups. And again, this can be used for any single type of trading. Again, number one, we can see that the Russell was bearish, was in a range. It's trying to break out, and it's kind of in this range right now from about 1900 to about 2200. Here are our decision points right here. So right now we're basically, what do we do with ranges? Bottom third, top third, fake out breakouts until we break out. Do not trade the middle. Doesn't matter what time frame. The only difference is each time frame has its own hold period and different meaning. A weekly chart's going to be more of your position trading. Anything below that is going to be your swing, and then start looking at scalp and day trading. But again, process is the same. Now again, looking at it, squeezing it up. Now we can see the Russell was a little bit more choppy than the other indices, and it went back to the bottom of the range. See, it's more in a range, and now it's kind of back at this top of the range. I'm going to put this line here, put another one here. And again, the reason I'm doing this is because you can see we're basically sideways, and I'm just trying to tighten that up a little bit. All right, so we're in another kind of range right here. All right, so what are the tools telling us? Previous day's range, we're inside the range. We were not above, we were not below. That's why I love this process. It quickly tells us what the short-term bias is. I want to see what the weak bias was. It was definitely moving lower left, upper right, and we're started to bounce. All right, so let's go to the 3-minute. And again, we were not above, we were not below. It was a range day. So now we look for those. Did we have momentum? Well, we definitely had momentum into rejection of the open. So here were the two setups. But again, this was the overnight traders. And then here, not much. I mean, this is just chop. And then we get into more chop right here. So Russell was not tradable. And again, if you were trading this, then you need to ask yourself why. All right, let's go look at some other asset class. Let's go look at oil. Again, I'm showing you the symbols that we like to trade that make up that market pulse. And again, I'm going to cover every asset class. So again, oil, bigger picture, weekly, step number one, what's going on? Look at those decision points, the key decision points where there's red and green candles, where price really paused and took off. And you can see that we're kind of in a range right now in oil. And again, what do we do with ranges? Bottom third, top third, do not trade the middle, fake out breakouts until price can get up. So right now, we went into the bottom third, we took off, we took at the top third, we're now kind of sitting in the middle. So on a bigger standpoint, not really much to do. Let's go to the hourly. So what are the short-term tools telling us? And we can see that we're kind of in a range the last 3 weeks. So what I like to do is I'll just kind of put some blue lines here. All right, so it kind of just tells me where that we've been in a range the last few weeks. All right, so now let's break it down. This last week, We've been more bearish, and then we kind of bounced off on Friday. And look what we had here. We had a fake out breakout. Remember, we weren't above the range. We weren't below it because, like I said, if we were going to be bearish, it would have done this. Okay, what we had is a fake out breakout, and then we had a range day. So let's go to the 3-minute. And let's check out what we had here. So oil opens up at 9 o'clock. Okay, so what did the overnight traders see? Overnight traders definitely. And again, if the open is not your strategy, then you would not have taken this trade. But if you've back tested and replayed this and you understand it, then that was a beautiful setup. Break and retest, one try, two try at the previous day's range low. It was a fake out breakout, beautiful momentum. And that it was actually a beautiful trade right here. Or this one was a potential another second trade right there. It was still in the bottom, kind of close to the bottom third. It was the open. So those were the two setups. And then again, we're always looking at, if we're at the bottom third, we're looking at 2-to-1, middle or top. At the top, I'm always looking at 2-to-1, middle or bottom. So this was a beauty right here. This one was okay, but this one was really nice. But again, if the open is not something you like to trade, then, and I will be honest with you, with most of our newer traders, I always recommend them, they wait, especially if there's no news, at least for about a half hour. A lot of times market, is kind of settle and they kind of show their hand. If you're a seasoned trader that have proven consistency and you back tested it, then I don't have a problem with that trade. Are we clear? Excellent. Let's go look at the euro. Again, I don't care what symbol you give me, the steps are the same, and we will find trades. Again, what has the euro been doing? Well, it was bearish, tried to get a bullish leg in here, and we can see that we were definitely more in a range here right now, tight range. Let's tighten that up a little bit since it's in a range. There we go. All right, so very tight range, but again, what do we do with ranges? Again, bottom third, top third, fake out breakouts at the top or bottom until we can break out. So the euro, until it can really break out of this 113 below or this 106 below, we could literally just bounce around for who knows how long. So the euro, not a great swing trade yet. Let's go look at the 1 hour. See if we see any shorter term trades here. And again, what's it been doing? Squeeze the chart. Over the last few weeks, it has been bullish, kind of had a pullback. And then on Friday, again, previous day's high, low, it was basically a range day. Let's go to the 3-minute, see if we had any shorter term trades since it was a range day. And we definitely did. Now, again, unfortunately, these were definitely, this was these were beautiful overnight trades. Momentum into pullback and pause, bottom third at the open. And again, commodities open at 820. So it wasn't until here. And so not the best of setups. That unfortunately, and this is trading, unfortunately. Sometimes there's going to be, especially if you're trading things like futures, there'll definitely be, sometimes the overnight traders get both. Sometimes the US session gets better trades. Sometimes they get both get trades. So, and that's just trading. And I'm going to do, don't worry, I'm going to do a few ETF and stocks right now. Let me just do gold. All right, let's do that. Again, if you listen, guys, I give this to you in the morning, I give it to you in the weekend, I give you the $1 million stuff, I give you our strategy, I give you our numbers, I give you the actual setups, I give you the actual steps. All right, I give you the data we look at. So now, what has gold been doing? You can see gold. I hope you told me it was in a range for the last 4 years, and it's now literally broke out. Here are the decision points where you have those key red and green candles where it's paused and taken off. And if we happen to break below, here's another here. So right now we're in a range from this like 2200 to about 24, 25. So again, what do we do with ranges? Bottom third, top third, fake out breakouts until price can break above. We break above, we're in uncharted territories. If we break below, we definitely have some decision point potential targets down at 21. We'll keep an eye on that. Now let's go look at shorter term here, 1 hour. Squeeze the chart. And we can see that gold has been bullish, but then the last few weeks, it's been sideways again from this 20, right here, okay? So what do we do with ranges? Top third, bottom third, fake out breakouts until we can break out. Using the shorter term tools, what did we have? Did we have bullish bias, bearish bias? No, we did not. Let's go down here. We had a range day. And as shorter term traders, the only good trade was right here, the fake out breakout. You had a weekly right here and here. So these were the two setups right here. Unfortunately, these were for people in the Asian and London session. And remember, gold is a commodity, so 820 right here. So really nothing. These were the two setups right here. Beautiful setups. Fake out breakout, and then momentum break and retest of the open in the bottom third. That was it. All right, let's go look at Bitcoin again. Same thing. Now Bitcoin is live, as crypto is the only one that is live when I'm doing this now. But again, doesn't matter to me what's been going on. We accumulated, and then we had our markup bullish phase. Now we're in consolidation. Put my decision points with those red and green candles, the most obvious. And again, what do we do with ranges? Bottom third, top third, fake out breakouts, bottom third, top third. Do not trade the middle until price breaks out. Now, look here. If we break above this, say 7, whatever this is, 70, whatever, 3, we break out above, we're in uncharted territories. We could be on our way to 80, 90, 100. But if we break below, we have some decision points here at 50,000 and also here at 40,000. Now, we also could do this in a range. But again, because you're a part of the Earn the Right to Trade Live process, you know bullish momentum, you know bearish momentum, you know what ranges look like, and you know what no edges. So your job is to then, I don't care if you're trading a 1 minute or weekly, again, is to stay patient for the setups. All right. Now, let's go look at a few stocks. And let's see. Now, I'm going to do the same thing. This is BITA. This is the Bitcoin ETF. Again, it's no different. I'm going to go to my weekly. And here we go. Again, now this one has, looking left, because this started at a different time, because remember this is an ETF, but it's actually back at the highs right now. And we have a range, same thing, 24 to this, say 30, 31. Again, what do we do with ranges? Top third, bottom third, fake out breakouts. Do not trade the middle until price can break out above or below. And again, if we break above, we have those uncharted territories. But if we break down here, we absolutely have some decision point areas where price can go. So again, it's not rocket science. It's just learning the rules of engagement, having a process that has been back tested and replayed hundreds and hundreds of times so you can then master the money management, the steps, the tools. Now, let's go down to I'm going to go down to a 15-minute. There we go. And we can see we have the decision points, we have our tools, and then over the last few weeks, we have been moving bullish again. And then this last week, kind of in a range. But again, it doesn't matter. We know where our bigger, levels are. We have the previous day's range high. We have a weekly and previous day's range low, midpoint open here. All right, so now let's go to the smaller time frame. And did we have a setup? Because remember, it was a range day, and we did. So here was your previous day's range, low, high, midpoint. Here was your open. And again, you had a multiple rejection right there. So for me, bottom third, beautiful setup right there. And again, I don't like trading the middle. So for me, I want to try to get, again, if I'm in a range, I want to see those really obvious top third, bottom third fake out breakouts until price can prove it can break out. All right. So now let me do also, I had some for Ethereum. Doesn't matter. All right. Here's Ethereum. Okay. Same thing. Now, Ethereum has not broken out above its highs like the Bitcoin. Again, but it doesn't matter. Where are the decision points? Here, here, and here, where price has paused and left quickly. And so we know with Ethereum, if we break out, we do have an upper target here, 47, that we have to contend with. If we break below, we have a decision point down here on 29.8, or we literally can do this again. But you guys understand ranges now. Bottom third, top third, fake out breakouts until price can break out. Breaks out, we have a first target here. We break out below, we have a first target potentially below. Let's go to the smaller time frame. Again, if you're somebody who likes to trade shorter term crypto, and again, we were consolidating and then we took off, and now we're consolidating again for this whole last week. Now we are, so I see a range here. So remember, ranges, I always like to look at the equal high, equal tops. Now, what are we doing right now? In the short term, well, I know we have this bigger range here, and I've got bigger targets above. And again, what's it telling us? Is it above? Yes, it is. Is it below? No, it wasn't. It was a range day that turned into a bullish momentum day. And now we have some potential targets. Let's go down to the smaller time frame. So this is live right now. So for me, as a shorter term trader, we had an inside day. I don't want to trade the middle, but we did have a break and reach, a strong momentum right there with an engulfing candle. There was your setup right there. And again, when you're part of the Earn the Right to Trade live setup, we'll get more into the actual entry, stop, and targets. But again, there's your setup. Okay. Now, all right, let's go look at a few stocks. Now, XOXL, that's the ETF for the semiconductors. It's one of my favorites. Again, I don't care what you give me. It's the bottom line. Okay, what are we doing? Well, just memorize whenever you see these parabolic, whenever you see stuff like this, these are parabolic, and whether it's on the top or bottom, these are potential trend changes. So we had this consolidation parabolic, and we were bearish, then we consolidated, and then we moved lower left, upper right. Okay, so now we definitely have this decision point right here, these right here, and then the most recent one here, and we definitely have that right there. I'll put this here too. All right, so what is XLL doing? We're moving lower left, upper right. We've had these decision points we bounced off. We had this one. Okay, so again, if we break above here, we have this area right here where price paused and took off. So we have a target there. Below here, again, this is for me as a range. So we're kind of in this 24.90 in here. What do we do with ranges? Top third, bottom third. Do not trade the middle. Fake out breakouts. If we break above, we have a target above. If we break below this zone, we have a potential target down here. Okay. But again, if you're going to trade the ranges, top third, bottom third, fake out breakouts until it can break out. Again, this is for your bigger picture. Now, let's go look down, smaller time frame. What's going on? What would happen Friday? What's been going on over the last week? Well, we've been moving lower left, upper right. And again, we can see here is your previous day's range low and your previous day's high at a monthly and weekly. So we know that's important. Let's go down to our step number 3, get a little more structure. And again, unfortunately for me, I don't like trading the middle. If you did trade the middle and you have it back tested, then this could have been a setup. But again, I'm going to focus on the symbols. Again, if I'm in a range day, I'm looking at the ones that have the strongest momentum rejection at the top third, bottom third, fake out breakouts at the top third until price can break out. That's me. All right, let's go look at, of course, Apple. Let's go right here. Okay, same thing. What is Apple doing? It's been lower left, upper right. It's been sitting in a range literally since sort of the beginning of the year. And again, all I'm doing is identifying the areas where price paused and left quickly with the red and green candles, and you can see it's basically sideways right here from about 164, let's just call it 198-ish. So what do we do with ranges? Top third, bottom third, fake out breakouts until price can break out. If price breaks out, again, we're on our way to this 200, 210, 220. If we break below, I have a decision point here. So again, if I'm looking in this bigger picture, I'm going to be looking for, this would have been an area. Again, top third, bottom third, fake out breakouts until I can break out above or below. We break out of below, we're in uncharted territory. Break below, we have a potential area right here. These are just potential areas, okay? But they very effective. All right, let's go see in the shorter term. Okay, so we have a yearly decision points. We have our tools. What's been going on this week? It looks like it's been more sideways from here, because I'm looking from here to here. We've been sideways from up here to here. And then what happened on Friday? Again, it was a range day. Here's your previous day's low and previous day's high. Let's go down to a smaller time frame. And again, gap up, that means we're bullish, range day, and there was your break and retest again. If you're somebody that likes to trade the middle, and remember, here's the rules about the middle. It's lower probability. But number one, if you're going to trade the middle, you better have space of 2-to-1 to the top or 2-to-1 to the bottom. You better have strong break and retest around that middle above or below, and you better have back tested to prove you had an edge. If you did that, I'm all for it. So this would have been a nice trade. You could either trade it with options or you could have just bought the stock. And again, your target minimum was 2-to-1 or the top. All right, let's go look at NVIDIA, of course. Everybody wants to talk about NVIDIA. Okay, now, I don't know about you, but, like I said, I don't trade parabolic stocks. I trade stocks that, give us, good pullbacks within trends. It definitely did right here. So again, what is the areas? We're moving lower left to right. We're bullish. Where are the areas where price has paused most recently? This area here and here. We just broke out. So now we are parabolic again. But again, I don't know about you, but I don't chase parabolic trades. I would want to see a move all the way back to one of these areas. So we'll see. But if you're somebody that likes to do some short-term trading, that's a different story. So right now, let's look at the shorter term. We can see consolidation. We gapped up. That means we're bullish. Whenever you have gaps up, this is just a green candle. You have a gap down, it's a red candle. Okay, so what did price do? It basically, right here, remember, we hit a yearly, monthly at the previous day's range high. No wonder we stopped right on the dime. Let's go to the 2-minute. All right, so what did NVIDIA show you? Again, it consolidated in the middle. And again, we had a move right back to the top third yearly monthly high. It's funny, we stopped at a dime. Like I said, if you trade the middle, and again, I told you the rules. If it has space of 2-to-1 from the middle to the top or bottom, you have strong break and retest at or above or below, and you've back tested it, then this was definitely these were setups right here, no doubt. And again, depending on what you trade, either stock or options, definitely nice candidates. All right, let's just do a few more. Let's look at Google. Let me just see if one's Amazon. I'm just looking at ones that might have some good movement. Yep, it's good Microsoft. All right, so again, And again, guys, if you have any symbols, just send them to me at hello@trade90x.com. You have any questions, hit it up. I'm going to do 1 or 2 more symbols, and we're going to get back to our holiday weekend. And again, I hope you're getting value out of this. Share this with people that need this. Again, I go through the same stuff every day. I show you the data that gives you an edge, bullish, bearish, or range. I show you the actual strategies on how we can trade larger time frames, or using our one chart strategy, which you can look at any symbol you're looking for, and you can use it for your position, swing, day, or scalp. Now, again, step number 1, are we bullish, bearish, or range? We're moving lower, left, upper, right. We're bullish. Where are the areas where price literally paused with red and green candles and took off? Well, for me, it's these 3 right here. What do we do right now? We're basically sitting in this range from 394 to 430. What do we do with ranges? Top third, bottom third, fake out breakouts. We do not trade the middle until price breaks out above or below. We break out above, we're moving up to that 464, 8,500. We break below, we have a potential target down at 364, or again, remember, ranges, that's again, this is why I love this process. It helps quickly tell you what's going on. Step number 2, go to the intermediary trend, squeeze the chart up, and we can see that over the last few weeks, we basically consolidated, we came up, we came down, we basically were kind of, I'm gonna right here. We basically have been in this big range here in this area. Okay, now we know we're near the top third of the range, but as a shorter term, what was going on? This week, we were kind of consolidating. And what did Friday do? Well, you got a previous day's high again by a weekly, monthly, yearly, and decision point. You know that's important. You have your previous day's range low. Let's go to the step number 3. And Microsoft gave you a beautiful setup. Look at this. This is what I'm talking about. You had strong momentum. You had strong momentum. Sorry. You had strong momentum. You had a pullback into here, and then boom, beautiful. This is what you call a beautiful fake out breakout. Okay. The sellers look to try and do it, and they get rejected. And right there was your setup. Now, if this would have been a bearish context below the previous day's range, it would have done this. This was your setup right here. You had multiple rejections right here. Beautiful setup. And then also you had a second setup right here. So if you were trading Microsoft on Friday, you had 2 A setups that whether you trade with options or stock, this one gave you not only 2 to 1, but it gave you your target 1. And then once it hit target 1, it went to a sideways range. And when you're in a trade like this and it's in a sideways range for 10, 20 minutes, just take your profit. You already hit it, and that's it. And plus, it was also a Friday going into a holiday weekend. All right, one other symbol I'm going to do is Mara. And the reason I'm doing Mara, not just FYI, I do own it, but it is a Bitcoin miner. And I will tell you that this one has had just really good movement. So again, master this look. Okay, that's parabolic. And usually when you have something like that, you have trend change. All right, so look what happened here. We consolidated, went here, went parabolic, we went bearish, and then we back into accumulation. We got up, but now we went into this kind of parabolic kind of look again, but we're in a range. So again, using your decision points, where are the prices? Where price literally paused right here. So for me, we're in a range right now from this 14 up to say 28.34. So what do we do with ranges? Bottom third, top third. I hope you're tired of me saying it. Bottom third, top third, fake out breakouts until we can break out. We do not want to trade the middle. So for me right now, if we break out above this zone, then we're on our way to 40, 50, and back up to the mean, version to the mean up to 80. We break below, we have a target down around this 7 area, or again, ranges, and again, until we break out above or below, you want to play the range. That means that for me, if I'm looking to buy this or do, options or buy the stock, I want to buy it down in this area, this anywhere from 7 to whatever 16 area. And then up here, anywhere in this kind of 28 to 34 area is a place that I'd want to either, if I'm in a long, I want to start selling, or or maybe keep a small piece, or I start fading and shorting. All right. So that's basically, yeah. Now let's go look at the short term, because Mara actually has a lot of good movement. So it is a good potential stock for, if you want to just scalp or day trade. So again, this week, the week before, we've been kind of moving up and then we were sideways. Let's go to a 2-minute. The reason I use a 2-minute versus 3-minute for stocks, because there's no overnight. And again, Mara gave you a beautiful setup at that bottom third. Look at that. So you had momentum, rejection at the bottom third, or you got momentum break and retest off the open. And then where was your target? 2 to 1. And we made a round trip all the way back to that high. So again, beautiful setups. Now, all right, let's go back. All right, let's go back here. Let me just take that off. All right, so what did we do here? And what do we do every morning, every weekend? Now, again, on the weekend, I go a little longer, sorry about that, but my goal is I really want you to learn this stuff. I want you to see it work with a lot of symbols. So what did we do? We looked at news. Okay, we know the days we have important news. Fear and greed is more neutral. Bitcoin is actually, fear and greed is bullish. Based on the 50-day moving average and shorter term, we're seeing some short-term indecision, but the longer term, we are still bullish. Again, same thing with the sectors. Again, I want to know who has control in the main trend. It's the bulls. In the short term, I want to know who has control. Is it the bulls, the monthly, weekly here? And it's kind of going back and forth between the month and week. I don't look at one day, but again, I want to see the one day, in sync, and we're out of sync right here. So that tells me there's some indecision. Next, the commitment of trade report. It's telling you the long-term bias, again, is bullish until we see a personality change. And again, same thing here. The long-term trend is basically telling you we're bullish. Short-term, we have some indecision. Okay. Now we go back to the chart, and I showed you right here. Again, your main trend, your monthly and above are bullish. Your weekly is bullish. Your daily is definitely, it's bullish, but now we have short-term indecision, and until we see what happens, we have no clue. We have to be patient. Now, using the 60-minute or the 30-minute or 15-minute, whatever you like, this allows us to use the Trade90X earn the right to trade live one chart strategy, as we talked about with the tools. We have the previous day's range, high, low, midpoint, open, and previous day's close. We have the weekly in purple. We have the monthly in orange. We have the gray in the yearly, and then we have the weekly start here. And again, anything above the previous day's range, it shows us potential bullish momentum or bearish momentum. And then again, we could have, let me just split out to the 15 here. And again, anything inside the range, we're looking at top third, bottom third. Fake out breakouts like this. See this right here? This is what you call a fake out breakout. Okay. This is what you call a bottom third trade right here. Beautiful right here. Okay. And remember, bullish and bearish momentum has to look like this, above or below. Otherwise, it does not constitute bullish or bearish momentum setups. Okay, because you're going to get a lot of this. We get the fake out breakouts above and below. And then again, the beauty of this is, again, you know the numbers, you know the setups. The tools quickly tell us, are we in a range? And if we're in a range, look for top third, bottom third fake out breakouts. And until we can get above or below, or do we have no edge, choppy price action, where your job is to do nothing. Okay. That is the key. And then I went through all the steps. So now, like I said, you now have a process that you can use every single day to break down any symbol you want. And again, the earn the right to trade live process really puts you in the driver's seat. Now, again, If you're not understanding anything, hit us up at hello@trade90x.com or book a 15-minute free call at the Trade90X Instagram page profile. We're here to help. All right, let's go back and enjoy our weekend, and then I'll be back with you on Tuesday morning.